welcome to Get Ready with Tony Stewart. Today, glad to have with me two people I've known for a long time, Jack Schmitz and Max Schmitz from DI and LTC Insurance Services. Jack has been a brokerage general agent with DI and LTC, formerly known as Beria Disability, for over 30 years. Jack served as president of several associations, including the Marin chapter of the National Association of Insurance and Financial Advisors, the North Bay Society of Financial Service Professionals, and the Plus Group, America's premier DI and LTC marketing organization. Jack also carries the highest industry distinction from the International DI Society, receiving the W. Harold Peterson Lifetime Achievement Award in 2015. Jack brings a wealth of experience and has always been a guiding light and resource for me since I've been in the industry. Max joined the family business as a third-generation DI specialist at the bottom of the recession in 2009. Since then, Max has developed a specialty in working with CFPs and RIAs to consult and implement proper disability planning for their clients. Max is the future of the industry and somebody I am really glad to work with. Max is also the co-author with me of the questions and answers on disability, the disability and insurance worksheet. Jack and Max, good morning. Thank you for joining me.
Good morning.
Thank you for having us.
Definitely. So let's jump right in. Let's talk about what you do. Jack, you want to go first?
Sure. What do I do? Well, I supervise the marketing team, the case managers, and also perform CFO duties for the organization.
Max, let's give us...
I'm basically the one who gets supervised. I mean, we both kind of act like a loose bearing, you know, it's sort of doing everything on an as-needed basis, which is kind of common in a boutique family agency like ours, especially in one that has such a niche like this where you kind of have to be on all ends, marketing, processing, systems, and all that. But really, my primary role is to educate and inspire, motivate our network of insurance and financial advisors.
Well, that's fantastic. Yeah, there's so many people in the insurance nerds network that fall into that category that are running small family property and casualty agents. So this is, you know, really exciting to have you both on to talk about this. So one of the things that, you know, I find really intriguing is that you guys are going to the third generation with DI and LTC, which is pretty unique in succession planning in families. So Jack, as we talked about, you're the second generation in the insurance industry, and Max, you're the third generation. I mean, what kept you both in the insurance industry?
Well, for me, it's the variety. You know, marketing is what everybody really needs to do, even if you're a doctor or a dentist or just looking for a job, you're marketing yourself. And marketing continues to evolve and new ideas and technology. It's interesting to keep up with it while learning to be a better teacher, leader, and manager.
Fantastic. Max, how about you? I mean, what made you stick with the insurance industry?
I mean, that's definitely a piece of it. The creativity factor is super fun to me, but it's also a little different. I mean, the risk of coming across as an idealistic millennial just comes down to the ability to affect change in people's lives, especially when they're going through a serious hardship like disability, probably even the toughest moment of their lives in a lot of cases. And, you know, I've only been in the business for 10 years, but the impact I've seen on the claim side, and certainly contrasting that to those who weren't prepared and didn't have this type of insurance, I mean, it's just a massive difference in lifestyle as they recover. So that gives me the conviction I need to keep coming back every day.
Well, that's great. Yeah, because, you know, staying in the insurance industry is not always the most exciting thing, but it's such a vital part of people's overall financial preparedness. So that's great. Max, you know, one of the things that intrigued me is that your college degree was in psychology. And so I was curious, you know, how does that help you in your work, or does it even impact your work?
Not a whole lot. I mean, the psychology coursework is pretty scientific, is really clinical. So it wasn't much about the interpersonal psychology that we're using on a day-to-day basis, unfortunately. but I was just up at a carrier conference doing some free consulting for them, and was talking to a group of underwriters and just kind of lamenting how I wish I had that foresight to process all that psych coursework with like a field underwriting goggle vision kind of. But no, psych was interesting, but college was definitely full of a lot of other interests.
Oh, definitely. So Jack, you and I have both been in the business for a long time. You've got significant experience. Do you see history repeating itself now in the insurance industry with some of the issues we're facing?
Yes and no. No, because there are new processes, products, technology, ideas, introduction of scalability that we're always having to keep up with new things. But then, change is constant. So I guess that's where history is repeating itself. Change.
Definitely. One of the things I was thinking about that with history repeating itself is, with some of the issues we're facing in the LTC product marketplace with pricing and assumptions that didn't quite work out. And it reminds me of what happened in the disability insurance marketplace, but in the late 80s, early 90s, when we saw a tremendous consolidation in the disability insurance marketplace. I mean, do you think that's happening with LTC?
Well, I think there's been a lot of corrections and detours. With the DI, it was the doctors in the late 80s and that they didn't quite realize that doctors might be using DI for a retirement program. And now, with the long-term care, they got it wrong in a few areas. They didn't realize so much utilization, the interest rates. So, but, the fundamentals are still there. The catastrophic event that is long-term care can derail the best retirement plan. And, retirement income needs needed by clients who end up in a nursing home will be significantly higher than income needed for someone who doesn't have a long-term care event. The classic income replacement ratio of 70 to 85% of the pre-retirement income doesn't consider catastrophic events like long-term care. So
Definitely.
This product is a reason that it's there, and it's going forward. We might see more linked benefit products. There was a study out by Millimum that did show that traditional LTC, 60% more standalone LTCI policies were sold than extended benefit products, linked benefit products. So even though we think there's this big wave, a lot of it's just accelerated death benefit. That'll still be there, I think. But the long-term care product, if you look at it closely, there's still a reason that they're selling it. And I wish more carriers would get involved. More carriers would come back to the marketplace now that a lot of the stuff's been ironed out.
Definitely. I mean, and I know this happens on the property and casualty side, and, that they refer to terms as hard markets and soft markets. And it seems like, there's a hard market right now, if I understand my P&C terms correctly, for both DI and LTC. I mean, even today, there's not a lot of companies out there selling DI products. Do either of you feel like carriers are going to jump back into the disability and LTC fields, given that there's such a need for those products?
It's a great question. Yeah, I think, it comes down to this issue of scalability to me and distribution. Because if you're looking at a traditional distribution force, it's just hard. It's hard to write disability and long-term care. I mean, it takes a lot out of you. You got to do a lot of field underwriting to do it well. Otherwise, you're going to have a lot of disappointment. And that's all investment. And then you've got the processing side, which can take weeks at a time too. So nobody's going for disability insurance as really their primary line. I would say it's usually probably 95% of the time it's going to be an ancillary sale to an existing product suite that somebody's already got with you. So unless that gets streamlined in some way, and I think there is a lot of potential for that in the future with technology coming down, especially on the underwriting side, where you're looking at electronic health records, Immediate MIB checks, prescription drug checks are already there, but just a way to kind of delve into that APS within minutes to make the underwriting decision within a matter of days. I think that's really going to cut down on a lot of the wastage and therefore make it much more approachable for somebody who's already talking about protection in other realms.
Definitely. Jack, do you have any thoughts on that?
But as far as the future of the business and companies getting in and out of the business, or more to come into the business, we have NGL, the new company in long-term care. We have One America, Life, company. I think others will get back in. On the DI side, we're seeing companies come out with new products. It just takes forever. And a lot of, the Department of Insurance back and forth stuff that has to happen to get a product the way you want it on both sides. And that's a 2-year endeavor. So that's one of the stumbling blocks we have, is just dealing with regulation to get things issued.
Yeah, so it sounds like that there's two issues we're facing. At least is the carrier's desire to get in the marketplace, the technology to make the market effective, and 3, the distribution end of it. So I'm going to pause the recording for just a second.
Yeah, I'm getting that.
3. So we were talking a little bit about the future of the industry and the issues and technology. And I think that technology is clearly going to bring some changes to the marketplace in terms of some of these products that are clearly needed, but have been traditionally undersold, for lack of a better word. And Max, I know that's something that you've been really leading the charge on, and you've been super innovative in terms of some of the things that you're doing. I mean, how do you see technology bringing some of these changes forward?
I mean, where to even start, really? There's just so much. I've kind of tried to break it down to a few different departments. So you've got the marketing side, which needs a lot of help in terms of doing self-servicing quotes and things like that to get the consumer a little bit more engaged and involved in that process. Because right now it just feels kind of like a black box. Like if somebody is selling disability insurance, which is in its own right difficult to find in a lot of cases, traditional P&C person is not doing that. So once they get connected with someone, then they get a laundry list of information from the consumer, and then it takes maybe a day, maybe a week to get a quote back. And so it just feels like a black box. Then, of course, once, they might be showing them 3 different options from 3 different carriers. It's like, well, are there more? Why am I seeing these when these ones are jumping off the page, not going to be a suitable fit for me? So, that whole, we need to remove some of those question marks, I think, and make it a little bit more consumer directed. But still approachable, because you can't just use the existing system the way it is and say, here you go, consumers, go run with it. I don't think that would be, it just wouldn't work. But then, on the back end, you've got the application systems. And this is where we saw a huge opportunity for advancement because, very few carriers, if any, have, a very functional e-application system on the DI side. Even fewer on the long-term care side at this moment. But so we decided to develop our own, just as a digital intake. Basically, it is the same questions on the app verbatim, but you don't have all the disclosures and authorizations yet. They get that once the request for e-signature comes through. And so that was another big push of ours, was to establish e-signature recognition carriers, which is just an absolute no-brainer. And we see it's ubiquitous on the life insurance side, probably property and casualty too. It's just taken years and years for disability insurance company lawyers to vet this process out for some reason. So there are a few select carriers that are going in there. And then, the biggest, boogeyman that I see is just this whole term of claims culture. It's kind of my goal. I'm just putting this out there to eliminate that term completely, because if you think about the human error that comes with just culture in general. I mean, you're talking about a culture that can be manipulated, a culture that can be that can go to pieces, organically. And just the fact that we are even allowing human interference into that process is, I think, a problem. So one way that would help consumers build some trust and agency in this process would be to establish like a claims process that's very black and white, very binary, and put on the blockchain, ideally, where you have a doctor as kind of like the signatory, if you will, to process the claim, because that's really ultimately what we're looking for at the end of the day, is a doctor to verify someone's disability. And so why are we putting it in the hands of the claims department? Why are we putting it in the hands of the consumer and having them interact directly and just trying to get little snippets from the doctor, when the doctor really is kind of the harbinger in the whole thing? So that would be the goal at some level. But yeah, as you can see, pretty impassioned about this, and there's just so much we can do, so much opportunity, and just a matter of seeing one carrier vault into the next level, and then hopefully others will follow.
Definitely. I mean, Jack, how do you see, I mean, you and I have been in the industry for 30 years. Do you think companies can do this, that insurance companies can learn, can an old dog learn new tricks like this?
The claims culture thing, Max is relatively newer to the business than us, and he hasn't seen as many claims. We've had a few claims that are where it's, the doctor's not saying that the person's disabled, and that's a problem when we have all these liberal definitions on the policies that look like, oh, you could just, not do one duty and not as long of a time, or have a 20% income loss, or either or, and collect on the policy. But it still comes down to the doctor saying, yes, this person had a heart attack and needs to be out for 6 months or a year, or working part-time for 6 months or a year or longer. But that's not the case. Nowadays, the things that used to say, the things that used to kill you now disable you. Now it's things that used to kill you might disable you, but the things that used to disable you might just cost you money. So that's why I'm a proponent of the critical illness product, because that 90-day wait, people aren't going past it. If you have a heart attack, it's just you have a stent put in and you're back to work in a couple of weeks. Your doctor might give you 90 days to get over the grief of it all, but you're back to work, being able to do all your duties within the 90-day elimination period. Where the critical illness could come in is give you a lump sum of $100,000 or $50,000, or up to $500,000 to cover that period of time that you're going to take off, just for your own psychological benefit. So we had a claim involved where it was a heart attack, and the guy had a mental exclusion. So he thought it was stress, and the doctors said, yeah, that's what it is. He can't go back to work because of stress, but with an exclusion for that, it's going to be difficult to have that be covered.
Yeah, well, I think you guys covered a lot of ground. I mean, I think it breaks into multiple areas. One of the things that I've been really working on over the last few years is financial literacy, and I think that there is totally a mismatch here. One is as to what policyholders understand that they're buying, and two, what insurance companies are actually selling. And it's like two people speaking completely different languages. And I think that's what you're both talking about, is the claims culture is, there's a mismatch, Jack, as you pointed out, between what people should be buying and what they do buy. And Max, what you're talking about with how the claims are processed, and I think what you're both driving at too is that there's a lack of efficiency in actually paying a claim that people get. And I think some of that can be served by technology, definitely. And that's where, Jack, I think it's interesting is that you and I have been around a long time and we've seen trends. And I think it always gets back to, people understanding what they're buying, and they don't always understand what they're buying. And I don't think one of the reasons why I've always enjoyed working with your agency so much is that you've been able to help me understand some pretty complex products. And I think that's the real value add from your agency and your services is that you're able to help people actually understand what they're selling, and so that agents can do a better job of working with their clients to fully understand it. I'm just curious, have either of you guys heard of the 3 policy? I think it came out of one of Warren Buffett's companies, and the concept is that it's I can't remember if it's a homeowners or business liability policy, but that it's just on 3 pages.
No, but I love that idea. That's
Probably be hard to get that approved.
Well, that's true. Yeah, we do know that, especially in California, there's so many pages you have to add onto a policy that are mandatory. But I think that could be somewhere the future of the industry. And I know, Max, you and I have talked about this with some of the fintech companies, and we've seen a lot of them come and go. And I don't know, Max, if you share this opinion, but it seems like they're often going after the low-hanging fruit in the insurance industry. Would you share that opinion?
I would, yeah. I mean, I think it is because the P&C world, in a way, has made things a little bit more concise and clear with the consumer. And I mean, there's still obviously a black box that I think an agent really helps to break down. However, a lot of these fintech companies, these insurtech companies, are doing it too, and in a different kind of way, a different style approach. Where literacy is part of it. Convenience is a bigger part, though. Whereas an agent, might not have the most convenient systems in their back office, or and a lot of that is due to the carriers that they work with, of course. But they have the ability to bridge that gap with literacy. The problem is it can also feel like a sales pitch, and that is where I think you've been instrumental in just beating the drum on education and literacy and just keeping it in that vein. And I've gotten a lot from that personally, through my formative years and everything working with you. Just really see the value in that.
Definitely. I mean, Jack, what are your feelings on all this in the fintech industry? Are you really following it, or?
Not really. I'm trying to keep up with the products we have and the changes that are happening there, so that we can convey those changes and opportunities for brokers to, they like fire sales.
Well, and I think that leads into the next, topic that I wanted to bring up. And I know it's one of the things that has really been front and center is the graying out of the traditional insurance agent. When your agency started, Jack, you and I would go to meetings and there'd be 200 or 300 agents just at a San Francisco Life Underwriters meeting. And what have you been averaging lately at some of these meetings? 10 people, 15 people for the entire San Francisco Bay Area?
I don't go to as many of them.
Yeah, exactly. I'm the one who's going still. Yeah. And yeah, you're right. Everyone my dad's age has stopped going. So.
Well, there's a few guys that still write some cases.
That's true. Here and there.
Go up for them.
It's not.
So
like
I mean, where are you guys seeing that going? Is as a wholesaler, I know, Max, you're one of the things we talked about in the intro is that you're working more to be a resource for CFPs and RIAs. Are you seeing that as a general change overall in the distribution system just outside of your agency?
Massively, yeah. And we're kind of a bellwether here in the Bay Area. I'd say Bay Area and New York City are usually the first to adopt change. But the trend that we've been seeing is coming out of the life days where people were just selling life insurance, and term life was could put food on the table for your family. You sell a few $100,000, $500,000, $1 million policies, and you're good. But now, you can't make it up on the term stuff. So people have started focusing more on, assets and selling. And when you have these permanent life insurance conversations, you suddenly become a wealth advisor and a financial planner because you're talking about retirement. And so that lended itself to mutual funds. And so people got into that game. And now you have this financial planning profession, which is kind of like this just amalgam of insurance and finance and investment advisory. And, people were realizing that there's a lot of churn in there, and that doesn't describe everybody, obviously, but there was enough where a significant base, at least here in the Bay Area, said, well, forget the sales stuff. We're just going to charge a fee and do simply advisory work. And so that evolution has kind of pushed the insurance discussion out of the financial planning conversation completely. And so there's a serious need for people to be insurance resources again for this fee-only base. And I think that is still going to continue to be the trend as people understand, that there's less opportunity for churn, less opportunity for, I dare say the term predatory sales tactics, but, there's just a little bit more of a sales push unless you're going to a fee-only firm, in which case, it's just expensive to manage, to have your money managed by those folks too. So there's a big cut in the middle where people, they don't want to be sold to, but they can't afford the fees. And so, how we establish something in that vein, I think is going to really dictate where this industry goes in the next 10, 20, 100 years.
Definitely. I mean, do you both, so Max, it definitely sounds like you still see a role for an advisor in the process, that it's not just a technology-driven solution, that there is a space for people to provide value in working with the consumer, but just that the role is going to change dramatically?
I think so. I mean, if we're talking about disability specifically, DI, it's hard enough to get a GA to figure out an occupation class on a consultant. I mean, there's just a stream of questions that's required to fully answer that. So you put that in the hands of an agent, still going to have some friction there. And then in the hands of a consumer, I think it's just going to be really impossible for somebody to have the motivation to do that accurately. So, yeah, I don't see DI really being a good streamlined solution for a digital platform. There are some products out there that are occupation agnostic. That's really the biggest snag to me. And so we're definitely exploring that opportunity. But, the issue is, these are complicated products that there's a lot of variation amongst a very small pool of carriers even. So you can imagine if things do change and we do get more players in this space as technology improves, just the amount of variation will increase exponentially. So you need an agent for that. And I do see the value of having an interpersonal relationship in that space. But it is a bit more of a specialty too. Not every insurance advisor is going to want to play here. But it is extremely important. We're kind of trivializing the need for DI a little bit in jest. But we see it all the time. I mean, back issues, shoulder issues, doesn't necessarily need to be a catastrophic, coronary event. It can be something as simple even or common as chronic pain. So there's a lot that we see as far as the need goes. There is, as you stated before, I think there's just this disconnect between the audience knowing, one, how to access it, two, how to really understand it. And just going forward, it's going to be tough to do that without a dedicated distribution force with DI specialists. So,
well, we have a lot of specialists. We have a lot of specialists in investments and specialists in health insurance and specialists in life insurance. We used to have life underwriters. I'm going to use my baby boomer air quotes here. Life underwriters who were trained by the big companies to look at medical, ask the icky questions that nobody wants to ask anymore. Now they just want to ask you, how much money do you make, what are your assets, or health insurance doesn't have health questions anymore. Disability insurance has a lot of questions. And I think it's kind of a blockade for many advisors to want to be involved in it because they don't like asking those questions. We have to be able to make those questions easier, streamline them some way, somehow get the medical information from people, maybe where they can do it on their own, like through our Dingo app. And then we've also farmed out the questions to the Hill app process, where now the insurance carrier can ask the question, so that the advisor doesn't have to ask those kind of questions.
Right.
It may lead to slightly more declines in modified offers than we would normally see from a professional life underwriter who's used to doing those kind of things. We still work with some of the older guys that were trained that way, and they seem to get better results. So there is like a training curve there, where that's where we can come in now and help these type of people, with Max being the expert who knows how to ask the questions, or somebody who's a DI specialist. So we're seeing more specialization everywhere, and I think DI is a place where we're going to see it more with fee-based advisors, investment advisors, retirement advisors, health insurance advisors. They don't want to do the DI. Even employee benefits people, they just want some kind of work site thing. It's almost like Aflac, but that's not good coverage always for everybody. It might be good for the masses, but it's not good for the higher earners. So we do need to sit down with people and explain that to them. It's a process. It takes some time, but we're up for it.
Definitely. Well, and that gets back to something that, you both know that I've been very big on, is that I think part of it does come back to the consumer understanding what their own needs are and having some responsibility in the purchasing of the products, is because they oftentimes aren't clear on what they're looking for and what they need. And I think that has a big impact, because there's not that, Jack, as you point out, that traditional trained insurance agent who kind of met that need. We live in a more commodity-driven distribution system, which is where we've ended up, and technology is definitely pigeonholing it there. So I think, as both of you point out, is if we can get people in the distribution system adding that value, which is where you guys have always been as an agency. But I think that consumers do have a responsibility to learn something and to make sure that they're asking the questions and purchasing the products they need.
Yeah, we didn't need to be called an ancillary product.
Yeah, when you guys are more of a core product.
Some channels think of it as us as the ancillary product. It used to be the third leg of the three-legged stool.
Yeah. Well, let's face it, the odds are greater that you'll be disabled than you'll die. And yet there's more life insurance sold than disability insurance, which makes no sense. And the three of us are all on the same page here. But I think that's something to be recognized, is that, Max, as you point out, there's got to be that knowledge.
A financial advisor shouldn't be able to call himself a financial advisor if he doesn't bring out protecting the plan. And there should be some liability there, and there really isn't right now. We've never heard of that case where the guy was sued because he did not offer disability insurance to somebody. Maybe somebody, unfortunately, it might take somebody getting sued for that to happen. But there is a talk about fiduciary responsibility and all that, and there is a responsibility. If you're a financial planner, that's part of the plan. But it's just they would rather just sell a mutual fund and show them how to do withdrawals from it when they get to be 70.5 or something. And that's
definitely. Well, this is a great conversation. Don't want to have this podcast run too long, so I wanted to ask you guys. One of the big things that's really impressed me about your agency is the very smooth transfer from one generation to the next. It's been, at least from the outside, relatively seamless. How are you guys implementing this generational transfer? And do you have any lessons learned that you'd like to share?
Well, we probably need some help doing it. We should look at it a little closer. But, it's easier when both children are in the business than if just one is in the business, because then you have more decisions to make on how you can be equitable on the estate transfer, upon death. But with both kids in business, that eliminates sort of the hassle. If we get too big, we'll have to think of more ways to avoid the estate tax, but we'll keep an eye on the estate taxes and taxes adjustment.
Definitely. Well, but from a practice standpoint is, that you've transitioned from being the main marketing contact to Max being the main marketing contact. I mean, how has that worked for both of you?
Worked for me. How about you, Max?
Yeah, it's a work in progress. No, it's great. We had there was a period of time where I just started going out like almost immediately and took my lumps and kind of had the resolve to just stay in the back office and be the pit crew for a couple of years, which allowed me to build a lot of relationships with our seasoned advisors. And so when it was time to kind of flip the switch back to a more of a marketing role, there was really no objection in our network. So it was, it was just a matter of, having just a really thoughtful approach to where we are in this business and just keeping it high level like this. I think a lot of people are attracted to that and they want to work with someone who knows that they're going to be around for the long haul, and has the vision to kind of commit to that longevity. And, just content, we've put out a lot of content in terms of different DI newsletters and LTC newsletters and just updates, like on this most recent one was this white paper on rate increases that got a really solid response from people. Disability survival kit, which kind of went through a lot of different disability income options for people who don't have DI. Just kind of that objective tutorial consultative approach, I think, made it really easy to transfer over.
Definitely. And I think one of the things too is that you establish yourself as knowledgeable in the process. And I think that made the transition easier from outside the industry is to, that as an agent being able to trust that what you're doing, where, I've worked with Jack since, I've been in the business and, so there's a long relationship there. And I think that this is going to be true for a lot of people across the insurance spectrum and outside the insurance business. How do you bring on a junior partner? How do you introduce them to clients and have them be successful and not lose those clients? I mean, Jack, what was your plan to say, hey, you know what, am I going to lose agents? I'm bringing in a young guy and, I'm going to introduce all my agents to him. I mean, did you have any concerns? What worked for you there?
No, because I was really young when I started in the business. I came right out of college, worked for my dad, and then he passed away 2 years. I was 2 years in the business. And the carriers, 90% of them were super helpful and friendly with the transition to allowing me to be an MGA. I had a lot of brokers who also really liked what we were doing. And they liked some of the comparisons that I worked on and processes that we developed. And, I think we were hardworking. We were working hard and, seeing people, making the phone calls, showing them that we were there and we're knowledgeable. And we gained their trust and we still have it.
Yeah, so I think the key lesson that both of you are saying is that it's about trust and it's about educating people. Would you both agree with that it's really about building that trust and confidence?
It's a lot about trust. You are making a one-time decision with your client. They're deciding one of the most important parts of their financial plan, disability insurance. You have to buy it when you're young, and it's better to buy it when you're young. A lot of people wait to buy it now because they don't know about it. No one's asked them to buy it. No one's talked to them about it. But, it's better if you buy this when you're 40 than 60, for sure. And it's a big decision when they buy that because that's the plan they're going to keep for 20, 25, 30 years. Mm-hmm. So they have to trust you, trust that you're knowledgeable, trust that you're getting the right product for their client. It's going to have this thing taking with them to attorneys and to BPAs, and other financial advisors or throughout their life, and it has to stand up to the years. So we take a it's important what we do and that we do it right.
Max, what's your take on that?
Yeah, I mean, I pretty much preach the Stephen Covey principle, which is you only do business with people who you know, like, and trust. And without the trust piece, obviously, it doesn't matter how much somebody knows or likes you, they're not going to do business with you. And you could say that for any one of those variables. So it is important to be seen. That's where the marketing comes in. You know, we got to be known first. And then, you know, I think people kind of can read our narrative through that and come to like us a little bit more. You know, I'm getting a little less likable as I get older, but still, you know, I think we do a pretty good job of connecting with some of the top advisors, certainly on the CFP and RIA side. For me personally, that's where I seem to just kind of be in my element. But and then the trust comes with just the expertise, and I have to really credit you for that too, Tony. I mean, obviously, I have one of the best tutors in both my parents in this business, but putting that book together very early on in my career certainly gave me it forced me to get into the nitty gritty and really establish my knowledge base in this business, to which I've always been able to kind of lean back on and know that, yeah, I basically wrote the book on this with Tony. So, yeah, we're set.
Well, great. Well, it's a pleasure to work with you on that. You know, I've had the pleasure of working with you now for 10 plus years, I think. And, you know, it's been great. So, you know, before we wrap up, I wanted to ask each of you what your number one tip is on financial preparedness. Jack, you want to tee off on that?
Yeah, just number one financial preparedness tip would be work hard and insure your income.
Nice. I like that. Nice and simple. Max?
Yeah, I mean, along that same vein, I just really want to challenge people to think about everyone they've known who's had cancer, chronic pain, heart disease, depression, anxiety. I mean, you can, one tidbit I got from an underwriter over this last week was that you can really live through a lot, and there's no need to suffer financially on your road to recovery.
Definitely, you know, having a financial safety net is so important. So where can people learn more about DI and LTC?
Jack?
From our website. DI-LTC.
We have a website.
All right. You know, so I would urge people to visit the website. The URL will be in the show notes, along with Max's LinkedIn contact information and Jack. And I'd encourage you to reach out to Max Jack if you have questions about disability and long-term care insurance. They're the guys who know it. And I'd like to thank you so much, both of you, for being here today. Thanks again.
Thank you, Tony. Appreciate it.
Yeah, and thank you, everybody, for tuning in for another episode of Get Ready with Tony Stewart. Please be sure to subscribe through one of the many distribution options also listed in the show notes.